Well, in the past 6 weeks, the Lagos Inland Revenue Service by the LIRS has issued 11 different public notices as far as new rules around some tax issues in Lagos State are concerned. And, of course, you know, Lagos is Nigeria's biggest economy. So let's unpack this with Yomi Olugbenro, who is a partner and a West Africa tax leader for Williams Deloitte, by the trading name Deloitte, the tax professional. Good morning.
Good morning.
It's good to have you here. Let's have an interesting conversation. I kept seeing a number of these notices in the newspapers, but again, they kept coming almost on a daily basis, so I kept ignoring them. Perhaps at my peril, because when Lagos State issues public notice, 11 notices, what is Lagos State trying to achieve?
Boason, the chicken has come to roast. Tax is the new oil. So I think the fact that every tax authorities and every government every state government across the country has got to do something outside of the norm, which is to depend on the money flowing from the center. That's exactly what's raising the tension and the increased consciousness on what needs to be done.
Well, Lagos State is where everybody looked at. Every state government in Nigeria look at Lagos. Even the federal government looks at Lagos. If Lagos is making money, they believe there's money there to be made. So everybody seems to dive in. So why and what areas is the Lagos State driving in? Why 11 different tax public notice?
All right, so I think what the state government is doing, or what LIRS is doing, is essentially to sensitize the public and to raise the level of awareness as to what the obligations of taxpayers are. Those public notices are not necessarily new laws. They're essentially supposed to clarify provisions of the law that have always been there. But what has happened is that in the past, many of those aspects of the laws have been neglected, again, because of the general neglect of taxation. So like you rightly said, in the past 6 weeks or thereabout, we've had close to maybe 2 different publications per week, nearly a dozen of them. So there have been publications around what happens when you make voluntary contributions, what happens when your employer pays your accommodation for you, what happens when you are given interest-free loan, what happens when you make pay insurance premium for life policies and all of that. So virtually different aspects of our laws that you typically don't get on the front burner. That's what the state government is digging up.
The one that is going to be of interest to everyone, so let's just delve into this because of time, has to do with employees, whether I'm getting stock options or whatever, whether I'm getting loans from my employer. I already pay a tax, but the Lagos State is asking me to pay another tax on the loan. The Channels Television will be granting me for my holiday in December or anytime. So this is going to bite both the giver and the taker.
Well, that's correct. So there are provisions within our law, as we speak, that actually tax, in addition to the cash benefit that you receive, what we term benefit in kind. So the tax law is structured in such a way that whenever you entitled to any benefits as a result of your employment, there are supposed to be tax impact of those. For example, if an employee receives interest-free loan, so the thinking is, if you have gone ahead to the bank or to the finance houses to go look for loan, there are interests that are payable. So if your employer gives it to you interest-free or at a rate that is below the commercial value, you tend to have received employment benefits. And to that extent, some amount of tax is supposed to be payable. But that's the general rule. But what happens is that the interpretation and the application of all of these rules are a lot deeper than what you have in the public notices. So what I think the public needs to do with all of the public notices is, first of all, they need to become aware of all of this, because there are a lot more. Voluntary pension contribution is another very touchy one that's making waves in the public. When you receive accommodation benefits, now there are provisions within that notices, for example, that says if your employer gives you an accommodation for more than 3 months, some tax consequences may arise therefrom. So I think both the taxpayer and the employer needs to be aware of all of these rules. That's number one. The second is that there are additional reporting obligations that now get imposed on the employer. So if you're providing many of these facilities, you need, in addition to your annual returns, to make certain disclosure to the tax authorities when you're filing your annual returns. And the third, perhaps, is where the crux of the matter is. Public notices are just what they are. They are public notices. They're not meant to create new laws. So there are aspects of those public notices that touches on grey issues, issues that are not very clear. And it's not expected, and it would be inappropriate to expect that by just mere public notification, laws could be changed. That would be a major battle for the tax authorities to face. And there are many of those within those notices that I have seen.
Compliance will be an issue here. Well, shouldn't be an issue because you need to pay tax. But again, apart from the corporate tax you're paying for companies doing businesses in Lagos State and their employees, myself, yourself inclusive, it's good, you guys, two of us are in Lagos, so I just share this together. That your employer and my employer will have to cough out more, and we have to cough out more as employees as well to the Lagos State government. That's what this means in summary.
That's exactly what it means. So traditionally, most taxpayers believe whatever I receive by way of cash benefit is what gets taxed. But now the tax authority is saying there are a lot more within our tax laws that you need to account for. And that's what the tax authority is saying. But also for the employer, it is the obligation of the employer to ensure that appropriate amount of taxes are deducted from their employees and remitted to the tax authority. So though ordinarily this shouldn't be an obligation, a tax burden that the employer should bear, but if the employer fails to discharge his own obligation, then the tax authority comes after him for interest and penalties.
In other words, if my employer gives me a new accommodation for 3 months or more than that, they would have to make a tax to the Lagos State government.
Probably so. There are rules around when that benefit becomes taxable. So if that accommodation is provided as a result of the necessity for you to stay close to work and you need to discharge your employment obligations and you have your own primary accommodation, that shouldn't necessarily create a benefit in kind. What the rule is saying is that in addition to the cash that is paid, I could have given unto you as my employee accommodation allowance. If I, in place of accommodation allowance, provide physical accommodation for you, you have in a way received certain benefit. And in such cases, benefit may be payable. Taxes may be payable.
What about the employee loan? I'm sure this is one thing that's going to raise a lot of dust. When an employee is given a loan, then you say, well, there has to be tax on it again. It's the company's money to the employee, isn't it?
That's right.
So why should Lagos State be interested in that money?
Well, I don't think it's Lagos State. It's actually the law. So if an employee is given interest-free loan, the thinking is there are benefits that you have derived from that. The reason being, if you have gone to finance houses, like I said earlier, or bank, you will have paid interest. So the amount of interest that you didn't pay, so it is not the entire principal or the entire loan amount that is taxed.
But my employer is giving it to me interest-free.
Absolutely.
Yes.
So the employer has given it to you interest-free. The differential between what should have been the commercial value and what is base value, by that public notices, it is supposed to be the difference between the adjusted MPR, and by adjusted MPR, it is mean 3% off the MPR, which gives us roughly around 11%. So the differential between that and how much it is offered. So if it's offered free, you're supposed to pay tax on the 11% of the amount of loan that you have received. If it's given to you, say, at 5%, you're supposed to pay tax on the 6%, which is the benefit that you have deemed to have derived.
By virtue of all of this, companies would have to go back to their tax consultants and tax managers for tax advice on how to comply with this.
I believe so. And also in order to also defend their rights, because there are, like I did mention, there are many aspects of that provisions. For example, the voluntary pension contribution, for example. These are issues that borders on gray areas of the law, which taxpayers seems to be abusing or taking advantage of. You cannot, address that loophole by just issuing public notices.
What does this mean about voluntary pension contributions? Among staffers in an organization, for example, or folks who just believe they're in a trade association?
All right, so it's actually a provision within the Voluntary Pension Reform Act of 2014. The original act was 2004, then it got amended in 2014. Is a scheme that introduces compulsory pension scheme for the country. So where the employer pays 8%, 10%, and the employee pays 8%. But in addition to the compulsory contribution, employees are permitted to make additional contribution to their retirement savings scheme. when you make contribution, be it voluntary or compulsory, you are entitled to tax relief, tax claim. Now, what happens is that in the old Act 2004, if you make additional voluntary contribution, you cannot assess it until the retirement age in line with the term that is specified. If you attempt to make a withdrawal earlier than 5 years, you are taxed on the amount you have contributed voluntarily, including interest earned.
So if you put, as an organization, if you put in that money in there, you can't take it out?
Absolutely. But in 2014, that rule got revised. That then created a loophole which says if you are assessing your voluntary contribution prior to 5 years, the interest that is earned on that voluntary contribution will be taxed. Now, what has happened is that, like you will expect, many taxpayers have taken advantage of that. Every end of the month, give an instruction to the employer to say, make an extra percentage contribution to my voluntary contribution. And then they go over to their PIFE 1 week or few days later to make withdrawal from that. So they are planning, if you like, their tax affairs to the tax authorities. They're actually evading tax. So the tax authority is saying instances of such abuse, we want to curb it. So if you make voluntary contribution in manner that suggests that you're deliberately trying to evade tax, we will come after you and ask you to pay that, the tax that is due. The
bottom line, doing business in Lagos under these new rules, what does it look like to you?
I don't think it's just Lagos. I think it's the entire country. Everywhere in the world that I know, whether you are an employee or you are an employer, there are tax burden that you've got to bear. So Lagos State is just suddenly waking up to, to the norm that is known everywhere in the world. And I think the wind will flow all over to the rest of the country.
This looks very interesting. But again, this also, I can see a bit of aspects of these relating to expatriates.
That's correct.
Of course, what Lagos is looking at because of the number of foreigners who are in the country.
That's right.
Working, they would have to come under some of these new rules.
That's correct. So there are, one of those notices actually relates to taxation of expatriates who are in the country. As you know, when you coming into a country to exercise duties of employment, you're supposed to come under the requisite visa regime. So one of which could be you coming in on a temporary work permit or you're coming on a normal work visa. So when you come in on a temporary work permit, traditionally, a number of people assume that if you stay in the country for less than 6 months, about 183 days, that's all that is required, you won't pay tax. But that's not the provisions of the law. 3 conditions actually need to be jointly met before you'll be allowed to go tax-free in the country. So that rule is what the Lagos State had tried to amplify. But within that context also, like I said, there are also grey issues and ambiguity that will also require some professional advice and guidance in trying to deal with them.
Let's go back after the break. This is not over yet. we just have to unpack a lot more with Yomi Olugbenro, a partner and West Africa tax leader at Deloitte. Of course, the issues around the Lagos State new Lagos Inland Revenue Service is one key issue we're trying. 11 new public notices have been issued, and as you've heard, these are not essentially new laws, and in fact, it's not just about Lagos State. It's federal as it is, so there's nowhere to hide from the taxman. Let's come back to Yomi Olugbenro after the break. Well, let's spend a few minutes to wrap up the new public notices issued by the Lagos State Inland Revenue Service. Yomi Olugbenro, partner and West Africa tax leader at Akisola William Deloitte. Thank you very much. Let's wrap up that very quickly before we move on to some progress reports regarding the tax amnesty. Part of this 11 notices, as we'll talk about the expatriates before the break, but we'll talk about removal and location expenses and tax impacts on them. Outsourcing arrangements and what have you. All these have to do with labor, employment, and things like that.
That's correct. So, so we have provisions in our law relating to instances when you go to pick up employees from recruitment agencies. So many of those recruitment agencies are employers of those individuals, and they outsource to the ultimate employer. So there are rules around what is the obligation of the outsourcing company and the ultimate employer, or the one who is exercising supervisory role over those individuals. So essentially, like the way the public notices say, The arrangement between the outsourcing company and the employer is that of a contract of service. And when you get paid based on the commission for providing employees withholding taxes is supposed to be payable. And that's what those public notices try to do. It still says the obligation to account for the personal income tax rests with the outsourcing company. However, the ultimate employer is also obliged to ensure that necessary tax remittances are done. Otherwise, that obligation falls back on him.
It goes double way.
Well, it could be double way. But it goes double if the right things are not done. So the outsourcing company is supposed to account for pay of its own employee.
Yes.
But if as the...
But not the ones he outsourced?
No, the one he outsourced are actually his own employees, because those are the people that sit on his own payroll. Yeah. So I have 2, 3, 4 people working with me, and I have them on my payroll. I have responsibility to account for their PAYE. If I outsource them to you, I would necessarily charge you a margin or a commission for provision of their services. So the margin element, it attracts withholding tax, for example. But you are not expected to account for the personal income taxes of my own staff. But if I fail to do, as the ultimate user of those services, the tax authorities will come asking you to account for the obligation.
To cover the obligation.
That's correct.
I think we've got to leave this for now. It's still early days. A lot of dust is being raised over there. Let's try and blow some of them away. And thanks for doing that for us. Let's get to the tax amnesty progress report. Is anyone paying so far you were aware of?
Well, I think a number of taxpayers are responding. From the way I see it, I think it's not moving at the pace I expected. But I expect that a lot more of sensitization and campaign will continue. It's not unexpected. It's not unusual. In our own environment, a number of people sit back just to watch and observe. Is this real? Is it genuine? Is the intention real? Is the intention real on the part of the tax authorities? And as soon as they are able to convince themselves that the motives are right and fair, they get on board. But there's really no time to wait, because by 31st of December, if any taxpayer fails to take advantage of that, you already lose the penalty.
But you just said the response is not as you thought. Perhaps because you're in the practice, you expect individuals and companies to have lined up from here all the way to your office asking you to help them sort out their tax papers, but that doesn't seem to happen.
Well, we're having responses, but like I did mention, it's not at the pace that I expect. I feel the pulses of many of my colleagues. I feel the pulses of many of the tax authorities. It's almost 3 months down the line.
Into the deadline.
And by 31st of December, some of the benefit that is accruable under this scheme will actually be away. By 31st of December, if you haven't put in your own application, you're ordinarily supposed to be entitled to waiver of interest and waiver of penalty. By 31st of December, you're left with just one, which is penalty. So you will pay interest if you put in an application by January or by February, even though the old scheme is supposed to last by 31st of March.
Do you think there should be an extension?
I think there should be an extension. I ordinarily expect that the scheme that was planned to be 9 months ideally should run for 12 months. I probably also doesn't believe that there should be a cutoff of benefit by 31st of December, because there's a lot that is involved in trying to make sure that your tax position is put in the proper place. The tax authority expects you to put very credible, very verifiable, supported by documentary evidence when you are making your claim. I think the amount of time that is required to do that, it's a lot of work that's involved.
Would there be a lot of burden on the authorities themselves to try and start verifying thousands and thousands and thousands of these papers?
I actually still get amazed as to the capacity of the tax authority to deal with all of the issues, if everyone that is expected to come on board actually did come on board. And I predicted at the start of this scheme that if half of the people who are supposed to take benefit of this gets on the scheme, there is absolutely no way an extension to 30th of June won't be in the line.
You said tax is the new oil.
Correct, Boason. Tax is the new oil.
Yes. So we've done about 2 point something trillion this year.
That's correct.
Target is about 5 trillion plus.
That's right.
So we have 90 days, and we have a balance of about 3 trillion naira not yet collected.
And I'm worried. I doubt the possibility of moving any close. because we've gone past the filing deadline for many of the corporates. So many listed companies and the multinational and the big company you have in a business have December as a year end. So they have by 30th of June and maybe extension for 1 or 2 months in some cases to put in their tax returns. So by end of August, whatever hasn't come in by way of corporate income taxes, just a fraction of that is what you expect for the rest of the year. So the possibility of meeting that target, in my mind, is very remote.
So where do we go from here with about 3 trillion naira tax revenue deficit in the year we're trying to dig our way out of recession?
Well, I think the government just needs to keep intensifying its effort, and that's why the subject we touched on earlier with the sensitization, with the campaign, and with the awareness, it's something that is commendable. But that's just a part of the step that is required. I think our laws, indeed, the entire tax regulation, actually need a complete revision. We need to actually revise them and make it a lot more, a lot easier. If you look at the voluntary asset and income declaration scheme, for example, the way it's being operated, you will expect every business that have presence in almost every part of the country to approach over 36 different tax authorities trying to put its tax affairs in order. I think that's humongous. I think that's too much. Why can't we have a central body where an application is jointly submitted to and these tax authorities are gathered in one room under the auspices of the Joint Tax Board to make sure that it's just one single process that is seamless? But you're going to have taxpayers dealing with 36 different tax authorities, including the federal tax authorities, just because they intend to take advantage of the tax law, of the tax amnesty, and just because that's the way our tax laws are structured.
So we should have dealt with the law before we roll it out?
I think so. But, you know, we haven't got the time. So, and that's why it seems to be dissipating energy in every direction. And it explains the reason why the result is not exactly what we're expecting it to be.
Do you think sometimes, you're the taxman, I'm sure you're not expected to be so, quote-unquote, merciful with the one who is paying the tax? The taxman don't seem to understand all that. But again, don't you think that the business environment is tough, and had been tough in Nigeria, that businesses and individuals are finding it difficult to actually pay tax?
Well, I agree with the postulation that the business environment is tough. That's a fact. The statistics are there to support it. But taxation is not about mercy. Taxation is about what the law says. So taxation is about giving a fraction of whatever it is that you're making in line with the provisions of the law. And that's why I get very troubled when there's any attempt by any tax authority not to abide by the provisions of the law. Because the law clearly indicates what is payable, how it should be paid. It doesn't matter whether there are loopholes, whether there are gaps within the law. So if there are gaps within the law, the gaps wasn't created by the taxpayer. The state is the one that put the law in place. So if there are gaps within the law, which the taxpayer is exploiting to his advantage, it behoves on the government and on the state to go and fix that, rather than to pass on that burden on the taxpayer. So yes, the business environment is tough, but you can't forgive tax for everybody. Everybody needs to pay a fraction of what is required. So the business environment is tough, but government's obligation and expectation on the part of the government isn't reducing. In fact, it's increasing. So government also needs to defray the cost of governance. Government needs to provide the amenities, and that's where payment of taxes can't be excused because the business environment is tough. They've got to exist simultaneously.
Yeah, but again, social media is not so friendly about the fact that, yes, folks complain they can't see the tax work for them, and some think that should be an excuse. I've had a lot of battle on saying, look, you just have to pay tax no matter what. What's your view?
Well, I think it's a chicken and egg. So which comes first? So do you want to pay your tax so that the government have enough to be able to fix all of the amenities, or do you want to wait until government becomes sufficiently accountable before you do that? The reality is that we need much more than we have on the table to be able to fix this economy. I made an analogy when I looked at the budget for 2017, that the entire budget of the Federation, federal government, all of the 36 states, all of the local government, put all together, it's probably less than 60 billion US dollar. That's less than half of what South Africa had in its annual budget. And if you compare the level of infrastructural deficit between those two countries, you realize that we are far from where South Africa is, for example, for a fraction of our population. So government needs the money and all of the money to be able to service what we want. What I think we should do is not to ask for taxes not to be paid, but we need to be a lot more demanding. Demand accountability, demand transparency, make sure that your money is being judiciously utilized. That's the only call that we can have that will be valid. We can't have a call to say, let me go tax-free because the business environment is tough.
Yeah, but you think no one should go tax-free. Does that include some not-for-profit organization? A bit of conversation also recent times whether some not-for-tax organizations, whatever, perhaps who have some businesses tied to the back end, should also step forward and pay tax.
Well, that's where the distinction comes. So within our law, if you are a not-for-profit organization, to the extent that all of your income is attributable to that non-profit organization, you're not liable to pay any tax. But what happens is that you have a number of NGOs and not-for-profits who have some businesses in your words tied to what they're doing. So if you are involved in any business activity, it doesn't matter whether you are a religious organization, whether you are an NGO, or whether you are into full-fledged commercial activity, you're supposed to pay tax that is attributable to that business venture. So the exemption is only limited to the not-for-profit activity, the primary purpose for which that organization was set up. So if you have a business tied on the back of that, tax is supposed to be payable.
But it looks mixed because you're collecting money from the right hand and you're using it to do, from a not-profit activity here, and you're using it to do a for-profit business here. So the money gets mixed and there is now, looks like it's not clear which money is what.
It can be mixed. It shouldn't be mixed. So if you have a business venture set up, it's supposed to be set up under proper legal structure. So do you have a business venture, do you have a limited liability company, or are you using the non-for-profit vehicle, which will be in contravention of the law? If you look at the certificate of registration that is issued for any not-for-profit, it is stated it doesn't permit commercial activities. So if you're using a not-for-profit vehicle to actually get into business, you're actually doing more than contravening the provisions of the tax law. You are actually contravening the provision under which you were set up.
So if folks donate money to me, my cost for this, and I take it to make a bread factory, what happens?
So the bread factory, it's a business, different from the NGO that is receiving donation. So if you receive donation as an NGO, there are objects, there are purposes for which that donation can be used. So if you use it for the purposes that the NGO was set up, it wouldn't be taxed. But if you get outside of that scheme to set up a business venture, then the business venture itself as an entity, as a legal vehicle, is supposed to pay tax.
And I can't take the money from the commercial enterprise back into the not-for-profit and just
but there's supposed to be corporate governance. So
that brings us to corporate governance.
Absolutely.
I just took that out of my mouth because it looks like, well, I'm living big, I'm living large. So where's the money coming from? Is it from the donations or from the business enterprise?
Maybe that probably explains the dilemma the government is seeing from where it sees it, and all of these rules around NGO bill, the Code of Corporate Governance that the FRC tried to issue at some point earlier on. That's why many of those...
Because the conversation is that it looks like a lot of folks with a lot of money that should be paying tax are hiding under the not-for-profit.
I don't think they will be able to hide for any longer. The rules are getting tighter. The awareness and the sensitization is a lot more in the public, and that's why the government also is sitting up and trying to make sure that gates are put in the appropriate places so that people are checkmated.
And when all this happens, those who make more money are those of you in the tax business, isn't it?
And for the government to be able to service every one of us.
Well, that sounds nice. Thank you.
Thank you so
very much. Yomi Olugbenro, who is our partner and the West Africa tax leader at Akintola Williams Deloitte. I hope we've unpacked that a little bit for you.